We want to make sure that the proposed house payment that you are looking to get yourself into isn't too burdensome. So we have a general standard that the house payment shouldn't exceed about a third of your gross monthly income. The other part of the equation is that if you have a lot of extra debt, if you have a couple of car payments and student loans and credit cards and things of that nature, that those also are not too burdensome. So we set a general guideline of house payment plus all other monthly debt payments not to exceed about 45% of your gross monthly income. We're going to look at your credit rating. We want to make sure that you have a history of paying your bills on time and that you don't abuse credit. Some people have 20 credit cards that are all maxed out at $5,000 a piece. So again, we want to look at that. And the credit rating service that we look at actually issues you a credit score. So generally we want to have a score of at least 620 to 640 as a minimum, and that score can go clear up to 800, but we do expect that a score of 640 tells us that you generally pay your bills on time and are responsible. Lastly, we want to make sure that you have a source of down payment, that you have some skin in the game, and so we were going to verify assets as well to make sure that you have sufficient assets in the bank to meet the down payment requirements of the transaction.